QQQ continues showing very strong momentum on the weekly time frame as buyers keep defending trend and pushing price higher inside of the rising channel. Price is now approaching a major reaction area near 714 to 715 at the upper trendline resistance after a very aggressive move higher. One thing that stands out on this chart is how QQQ has repeatedly reacted near this upper channel resistance over time. Almost every major push into this area eventually led to a cool down, a pullback, or a consolidation phase before continuation higher. That's important because price is now testing that same area again after multiple expansion weeks back to back. Momentum still looks strong overall, but the further QQQ stretches away from the weekly 20 SMA, its home base, the more important risk management comes because entries up here are no longer as efficient as they were near the earlier breakout zones. If QQQ starts slowing down or cooling off, the bigger area I'd watch for buyers to potentially defend is around 665 to 670. That area could become the next higher low if bullish structure continues holding.
The S&P 500 SPY sold off at the test of this rising resistance wedge. Once we tested it, sellers came in, we saw a gap down. However, buyers came in very, very strongly at the end of the session when we were down 1% and took it all the way back up on a full V-shaped intraday recovery, closing the session green. Now, despite this recovery, most traders might see this as a sign of strength and continuation. I see it as a sign of a warning flashing, telling us, hey, this is where sellers are stepping in. Despite sellers stepping in today, buyers showed up, but this should be a warning because there is going to be more selling. And let me show you that sort of anatomy within the candlestick structure as well from the prior peaks that led to a sell-off in the upcoming sessions. So if we take a look at the prior retest of that rising wedge resistance line, we printed a doji candle, and then we printed that hanging man reversal looking candle, which is very similar to today's session, where it set the stage for further selling to come in the following sessions. So I personally see the S&P 500 being in the same scenario here. I use the 20 EMA line as a momentum gouge. And in this case, the market is bullish, so I use it as a bullish momentum gouge for us to get close to it in a form of consolidation, contract back down to it after every expansion, and then move higher. So in this case, given that we have now expanded again, what I would like to see is a return back to that 20 EMA line, print a demand candle, and that will be a clear indication that bulls are maintaining control and they're going to go for another expansion higher afterward. Now let's take a brief look at history and the relationship around the 20 EMA line and price action. As we can see right here, we were away from the 20 EMA, price consolidates, and once we get close enough, then bulls start stepping in. Same thing here. We consolidate, we consolidate, we consolidate. Keep in mind, each candle is 1 day, so that means 1, 2, 3, 4. If we count those two candles, that's 6, 7, 8, 9, 10, 11. That's around 15, 16, 17 sessions just right there. So then again, we expand away from the 20 EMA line, then we contract back down to the 20, and then we print a bullish engulfing, that advances higher again. Same thing happens. We extend away, come back down, print a bullish engulfing, expand higher again, come back down, retest with a bullish candle, and then expand higher again. And that happens over and over until you eventually get a much larger correction that resets the trend on a much larger scale, forming this sort of bull flag that we have here that further in correspondence sent the price higher. So this is what's happening at the moment. This is what I expect us to see in the upcoming sessions for the S&P 500 as well, especially given that we are at the top of that rising resistance of the wedge. And this is where the trend pulls back to go from resistance to support to resistance and perhaps to support. Now, again, I'm not really predicting that whole way towards support. What I would like to first see is a retest at the 20 EMA line so that I can see the reaction of the bulls there. And if I like the reaction, I can get on and continue to ride the trend and continue to go with the trend there. So that concludes my analysis for SPY. Now we're going to take a look at some of the AI momentum stocks that have been leading this market higher. As we can see, AMD also is very, very overbought. We did see a sell-off today from 458 highs all the way down to 425. But buyers did step in and they took the session all the way back up to 449 towards the closing. So yes, buyers are still stepping in very strongly. And like I said, most traders are going to misunderstand this for strength. However, that is not always the case. This is usually the first signs of selling to come. And we can see one right here also. We printed that candle and many thought this is it. The market is very strong. Buyers are still stepping in. This is going to move higher. And before you know it, this led to a major gap down from 252 all the way down to 236. At these overbought levels, it's not a shock at all if we start to sell off. Now, where would I want to get back into AMD and ride the trend higher? This is where you get in. At the 20 EMA line, printing bullish engulfing candles and other forms of reversals, and that sends us right back up to make new historic all-time highs if the momentum is still there. Same thing with MU, very, very overbought. We did see sellers stepping in, but they took it all the way back up. They couldn't fill the gap. But this is the first sign that sellers are stepping in, and there can be more of it in the upcoming sessions. Very likely than not, we should see a pullback down inside of the zone at 650s, some consolidation where bulls will try and step in at the 20 EMA line. And if bulls hold, then we can see new highs and a continuation of the uptrend. This is SNDK, another stock that saw some heavy selling. It was down negative 12% at some point during the day. Now let's take a look at another stock here. Qualcomm. Qualcomm sold off the biggest out of all of them. This stock was down negative 17% during the session, as we can see at that level of resistance there. So it wasn't able to come back up as much as the other tech did, the other AI names, and it still shows major overextension levels, as we can see. So I would expect Qualcomm to be a buy, a strong buy for the buyers around 185 to 190. Towards that resistance level, break it out and see new historic all-time highs from there. That will be a much better opportunity, in my humble opinion, using my system to wait for the perfect entry or wait for demand reaction to come back to a level where you know they're going to hold. INTC also had a large sell-off today, but buyers did step in, just like the other tech, with the overall market, and this is where we still currently stand. Like I said, I saw many in the market interpreting today's session as a continued strength, like, oh my God, yes, buyers are still strong, we can continue to go with the trend, but that to me is the complete opposite. This is the first sign of sellers stepping in, and it's a flashing warning signs of more selling to come at these overextended levels where the supply and demand dynamics are very lopsided. At the test of the 20 EMA line, that will be the first sign of strength for the bulls there, to show that they're still stepping in strong. As we can see right here, these are the kind of candles we would like to see at the 20 EMA line. Now this was from earnings, but if you go back throughout history, you'll see this. This is basically what happens whenever we ride the trend. We expand away from the 20 EMA line, we come back down, we print a bullish engulfing candle, and then that propels us higher. And you can see we get very, very overextended. We come back down to the 20 EMA line. We created that bear trap operation there where we closed at 53 and then opened above the high of the prior day candle and doing what is known as a gap and go and closing the session as a very bullish signal. We came back down, reset at the equilibrium one more time, and then that sent us to new highs. And that's exactly what I'm trying to explain in today's daily price action video. I'm telling you not to chase this momentum, but rather wait things out, let the market do its thing, come back to where demand is the strongest, and not chase where the momentum is likely to get late buyers to be trapped. And that concludes our daily price action analysis for today. If you enjoyed it, please give us a thumbs up. Comment on our video what your thoughts are. Thank you so much and have a great rest of the day. See you in tomorrow's price action. Let's see what happens.